What we do here is go back, 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 back.
Studios in Windhoek. This is the Capricorn Group and EY Annual 2021 Budget Review broadcasting on our social media channels. Welcome to all who have tuned in. My name is Cameron Kotza, the country leader for EY Namibia, and I'll have a dual role this morning as moderator of the panel and also a panelist talking about taxation. I encourage you to listen to our panel and ask questions relevant to the discussion, which our panel will endeavour to answer during the final segment of our session. Turning to our panel today, I'd like to welcome the Minister of Finance, Mr. Shimi, and also Floris Berg, the Chief Economist of Capricorn Asset Management. We look forward to your views today and see what we can enlighten the public about. So, if we go back to COVID-19, the epidemic has had an immense impact on the global and local economy and all sectors in Namibia. Since the lockdown in 2020, the Namibian government has implemented various measures to aid both the public and business alike to ensure we keep the economy afloat. The Honourable Minister and his team have worked tirelessly to resuscitate the Namibian economy to curb a further downturn in 2021. We'll hear more about this later on. The pandemic, as I said earlier, wreaked havoc globally in 2020. After the pandemic was first announced in March last year, the evidence of its effects has had on our country is enormous, and the question is, what can we expect during the next year? So I'm going to ask Floris to share his views with us as far as the budget that was delivered by the Minister last week, following the impact of COVID-19, and what can we be looking forward to? Floris, all over to you.
Thank you, Cameron. Good day, Minister. Yes, I think that is one of the key issues regarding the fiscal position that we're talking about is the macro environment is a key driver of what can be done and what can be expected. So we mustn't forget that last year was a crisis year, right? We were in the depth of the crisis. We had the fiscal stimulation package that cost quite a bit of funds, and the spending was by no choice had to be increased quite sharply. So the question is if we can actually reduce the spending that has been forced on us of last year. If I look at the budget numbers, it seems so. But just to get back to the actual macro environment, if you look at a chart like that, it doesn't look like much, but the fact that we now had basically 5 years of relatively flat growth, the dark bar is the budget year. Hopefully we can get a bit of nominal GDP growth over the next 5 years or so. I see that the ministry works with a nominal GDP growth of about 5.6%. That basically means we're assuming a 3.5% inflation and a 2% real growth rate, more or less. I think it could possibly be a little bit better now for initially over the next 2 years or so, but I think that's a reasonable outlook to work with. But the big problem that comes in this environment that also now appeared was the hit on SACU revenue. If the slide, yeah. That is a chart on the SACU revenue. You can see there the dark bar, how it falls from where it was previously. And this is largely due to a region-wide slowdown, as you mentioned, and a slowdown in trade. So we're taking a hit of 7.5 billion in SACU revenue. Now that is a huge hole because it's 4% of GDP. And incidentally, it's equal to the Eurobond that's maturing at the end of this year. So there's a big trouble there, and I would maybe, if the minister could say, if there's any possibility of a mitigation there from within the SACU pool, perhaps. So on the revenue side, things are looking fairly shaky. But then on the expenditure side, the old the old bugbear we have here is the wage bill. If you look at it as a percentage of GDP, you can see that it actually declined quite a bit there in the late 2000s, in 2008 and 9 over a period. So it shows that it can be done. So we hope to see a similar profile going forward, where the wage bill is managed down over time. I mean, we can't just now cut wages. It'll tip the economy into deeper recession if we have got lots of civil servants now being unemployed. So we can't really do that, but it does mean that there are other expenditure items that need to be cut very sharply because our interest bill is rising very fast. This is just the interest bill as a percentage of revenue. So this is the other, call it the problem child in the expenditure side, is the interest bill. And interest has got a life of its own. It's a statutory spending, you can't really cut it. Maybe the minister can comment on the situation with regards to the Eurobond perhaps. And I see that the IMF is starting to create a new reserve fund worth $650 billion that they want to set up to assist emerging markets. So it is possible that we could get some assistance from there over the next year or so, or maybe longer. But yeah, this is a key issue. And all of this obviously results in the borrowing requirement, which is the deficit to GDP ratio. And if you look at that bar chart, you can see that we haven't seen the 3% type of level now for quite a while, which is generally sort of assumed to be a reasonably healthy ratio. But it'll take a long time for us to get back there from the current position that we're at. So that is of concern to us. And if you've got a deficit over time, then it obviously results in the debt increasing quite sharply because government needs to borrow to fund the deficit. So we've seen a very sharp increase in the debt profile if you look at it as a percentage of GDP. Currently we're sitting at 70%, and it is probably going to rise to about 83% or so. So this is one of the key areas also that the credit rating agencies follow and track and say, look, this situation is of national interest for us. I mean, the government debt sustainability is a national priority. It is actually very important for us to see what will happen with the whole funding situation. So, in conclusion, I would just maybe like to propose or ask whether we could perhaps, from a fiscal management perspective, I think we should maybe put out a 10-year plan and say, look, we think a healthy fiscal position consists of these ratios. GDP must be the guideline because GDP is really your resource. You've got to live within your resource limits and say, we need to manage the fiscal position to a certain profile. We know we can't do it overnight. It's virtually impossible. But this is what we aim for. And if we can get in that direction over time, that will assist a lot with investor confidence and in economic stability. Let me stop there.
Thanks, Floris. Maybe just, we're going to take questions later on, but maybe a question just right at the start now. Do you think that the revenue estimations are realistic, given COVID-19 and the impact? And when you go through the malls, you see lots of empty shops. If you go down Independence Avenue, there's some empty spaces in buildings. Is the revenue estimation reasonable?
I think that it is the other sources other than SACU is reasonably there's reasonable positive assumptions underlying, let's say, for instance, the VAT source, VAT spending source. It is estimated to grow quite sharply from the COVID lows, but it will not get back to the pre-COVID level. So there is some conservativeness in those types of predictions, similarly with the other big source of corporate tax. Corporate tax is assumed to be reasonably flat at about 7 billion. And then personal tax is also assumed to be reasonably okay at 14 billion. So VAT and personal tax both about 14 billion, thereabouts. Then corporate tax at 7, and then you have your SACCO revenue at 15.5, where last year it was 22 billion plus. So that is the key challenge, is can we manage the SACCO situation? Because that leaves the hole. That is where the hole is. And I think it is about negotiations within the SACCO pool.
Okay. Thanks, great. The Minister can maybe also comment on that about the revenue estimations. But let me then just turn over to the, I suppose what matters for most of us, individuals, and for those people who have businesses, is the tax situation. So the one good thing, as you can see there on the slide, we are expecting the tax rates between 2021 and 2022 to remain the same. The Minister did indicate in his speech that they would be reviewing the corporate rates later, and he will make an announcement in the mid-year budget. Maybe one of the other questions that the Minister can respond to, and those of you know that on my agenda has been the lower income earners that are not getting relief at the lower end of the tax table. And I think if one looks at those people, some of them have lost jobs, so they don't have any income, and yet the tax rates are remaining the same at the lower end. And I would have encouraged, at some stage, we need to relieve the pressure on those on the lower income earners as far as tax is concerned. The VAT rate will remain the same at 15%. It's a fairly competitive rate if you look at countries around us and internationally. So I think we can all be pleased that the VAT rate has remained the same. There's the actual tax rate demonstrated on a graph. Yeah, so if you earn less than 50,000, you will pay no tax, and from there on, the table sort of plateaus out at 37% at an income level of 1.5 million. And if one talks about the old term of bracket creep, where people get salary increases, it could be that because you move from one tax bracket to another tax bracket, you've actually got less disposable income in the next year. And that's what I think we must try and address, probably in the shorter term rather than in the longer term, and maybe look at somewhere else where we can get additional income. The other thing that the Minister announced, it's a section that's been in the Act for years and years, but my assumption is we have not received any income from this source. So these are for international owners of or charterers of vessels and planes, aircraft, that uploads passengers and goods from Namibia and transports them somewhere else. I think that's a good source to get additional income that Namibia would be entitled to in any event in terms of the current legislation. That was good. The other good announcement for us as individuals is that the Minister is going to increase the tax-deductible contributions to pension funds and educational policies. We think it's only in the 2023 tax year and not in the current tax year that ends March 2022, from 40,000 to 150,000. My only concern with this is I'm not sure how many people have really got the additional funds to put away, because it is a form of encouraging additional savings and to make people less dependent on the state when they retire. But it's a welcome announcement, and I think those people who can make use of this incentive to save should really do so. Then the dividend withholding tax that was previously announced, it appears from at least what I'm reading that this tax will be effective also in the 2023 tax year. And the question maybe that the Minister must tell us, we're trying to revive the economy, and yet we want to impose this tax. Should we not maybe delaying the tax by a few years and rather kickstart the economy? We're expecting private business to to invest in the economy and hopefully create extra job opportunities. But if there's a 10% less take that the investor gets, maybe that will discourage, or I would say it is discouraging investors to invest in businesses to get, if they have to pay this tax. So maybe a further delay in this tax is, it should be considered in my view, but the Minister can maybe tell us more about that. And then what we all refer to as sin taxes, it's actually not new to us from today or since the Minister announced it. It goes back to 24 February 2021. So for those who are looking at the slide, your cigarettes should be costing significantly more, $1.39 per packet. And if you're a whiskey drinker, then you're going to pay $5 Namibian dollars 50 more per bottle. So it's an encouragement to consume less, but this is obviously also a handy source of income for the government. So that's the wrap up on all the tax announcements. So I'm going to ask the Minister to take us further. So Minister, the budget focused on a number of important aspects, which included the vaccination and prevention of COVID-19, as well as economic and social upliftment programs. It's interesting to note that there's a significant focus on support towards the SME sector and the health industry, and I understand our viewers are quite interested to understand the allocation that has gone to the health budget, as well as to the educational budget, and those traditionally has always taken the most part of the budget. What highlights can you share with us that's important to take note of?
Thank you very much, Cameron, and thank you very much, Flores. I think you have sketched a very clear background as to what the budget has offered in terms of the macroeconomic situation, but also in terms of the tax proposals that we have made. In terms of sectoral allocations, yeah, as you know, we are in the middle of the pandemic, so we have to increase our defense towards containing the pandemic. So health has received what it traditionally receives, in other words, for the continuance of provision of medical services. But on top of that, they still have to buy extra PPEs for COVID. They still have to scale up a little bit, although they have done that last year, they still have to scale up their facilities. So that process is still continuing. But more importantly, we are now also investing in the vaccine. So apart from the Ministry of Health budget that you have seen, there is also almost close to 500 million that is in the SEMA's budget that is set aside for the procurement of the vaccine. So should we find the vaccine or somebody who is willing to give us the vaccine as soon as possible, that provision has been made, apart from the money that we have already made available through the COVAX facility last year. So that's more or less what health has received. Education also is more or less the same, to continue with the provision of their educational services. Of course, last year we spent a lot of resources, almost close to 800-900 million, to improve the sanitation facilities at school. So that program has almost come to an end, but there are still few schools that are still continuing. So additional resources have been put aside, but not as aggressive as last year. So and that's why the Ministry of Education allocation has more or less remained the same as compared to last year. So others, of course, you have seen what is in the budget. There has been a reduction in some others. There has been a slight increase in some others as well.
Good. So if we take that the background of the budget, or the theme of the budget was boosting resilience and recovery, Minister, what do you think is the benefit for Namibia as far as the Africa free trade area is concerned? You mentioned it in the budget. If we think that we're probably a major importer of most goods, what benefit do you think is there for us as far as this free trade area is concerned?
Yeah, the benefit is in the fact that we now have a market. We now have a market where we can be a bit more competitive compared to anybody who is selling goods and services, especially goods from outside the continent. So if you set up your production facility here, Cameron, you produce certain goods, you can sell these goods free of duties to the rest of the continent. And therefore, you can actually compete better with somebody who's coming outside the continent, because that person or that outfit will have to pay tax. You don't have to pay duties. So that's an advantage. And therefore, we really have to organize ourselves as a country to undertake the necessary reforms. First of all, to reduce the cost of business, to attract more investments. And attracting more investment also requires a lot of coordination, especially government's role, in my view, should be coordinating the private sector's efforts, because the private sector should be the one driving this process. But they need coordination. There may be some missing ingredients that governments will have to provide in terms of trade facilitation, in terms of infrastructure that needs to be provided, railway link, for instance. All these things, that's the role of government. But then the private sector will have to exploit these opportunities so that we can sell more goods, increase our production capacity here in Namibia, and we can sell these goods to the rest of the continent, because the market is now emerging. So that's the opportunity that we see.
So Minister, what I'm seeing is, getting back to this dividend tax,
Yeah.
I think there's some mixed messages coming out. We want private sector to invest more.
Yeah.
We want them to stimulate the economy by investing.
Yeah.
But yet we've got a measure like that which seems to say to people, well, isn't it, I'm taking risk to invest in this business.
Yeah.
Isn't it safer to just put my money in the bank and I'm not going to create any job opportunities? I know I'm going to get an X% return, or invested in a unit trust with Floris in them, instead of taking a bigger risk. So shouldn't there be some relief for those people who are taking risk to invest in a business? And then if one talks to some of the world rankings, Namibia seems to be too low down on the rankings as far as I'm concerned. The competitiveness as far as the business is concerned, Namibia is ranked in the bottom third of the table. So how do we get that right?
Maybe I can add to that question. I think throw RAMBI in, because I'm actually personally quite heartened by the RAMBI plan that came out just now over the weekend or so, because a number of those things are addressed in the plan. There's a whole list of things, and the Minister talking about coordination. I think it's an excellent opportunity for coordination, both from in the public sector and between the public sector and the private sector, because some of those things are addressed and there's certain timelines to it. So we hope to see more and more reporting on, the incentives, for instance, investment incentives, the Investment Act, governance issues. There's a whole host of things in there. So it is very complex, granted, but I think we've got a chance to address those types of concerns to a large extent.
Yes, Flores is right. Much of the reform that we have to undertake to improve our coordination and therefore enhance the competitiveness of Namibia, it's actually captured in the RAMBI Prosperity Plan number 2, because that is also what is bringing out the recovery plan. Because part of the things that are in there is to help us to recover, or to help the economy to recover. So we'll have to undertake all those reforms, improve coordination. You know that government has now created an investment promotion board, which is really given high profile, to try and coordinate things from different angles of government, or from different areas of government, and of course to create that link between government and the private sector. So I'm also, like Flores, I'm a bit excited that I think that's a step in the right direction. When it comes to dividend tax, the issue was not to make us uncompetitive. We were really looking at it from an equity perspective. So foreign shareholders, foreign investors are already paying a withholding tax on dividends. A domestic investor is not doing the same. So we thought maybe it wasn't fair. But this is something that can still be reviewed as we go along. And the idea is that, of course, if you keep the dividends in the company, you don't pay tax. So maybe that will also encourage reinvestment. But you know, it may be a two-edged sword. So that's something that we'll have to continue looking at. But it was really from an equity perspective.
Yeah, good. I'm just going to turn to some of the questions that we've got. So the first one, someone is asking, does the money donated or loaned from other countries make up part of the national budget? If so, can it be explained how these funds are being utilized or divided?
Yeah, so maybe I can come in there. Yes, if you look at our revenue side, you will find tax revenue, you find non-tax revenue, but you will also find grants. And the grants are a small part of the revenues. I generally hovers around about 2% of revenue, 3% of revenue, run about. I haven't looked at the latest figures. It may even be smaller than that. Yeah, so it's part of revenue. It's not like Flores is saying, it's not a significant part of revenue. It's very, very minuscule. But yes, it's part of our revenue, and therefore, when we receive it, if it's through the budget process or through the budget support, it forms part of the revenue. And then when we allocate expenditure, that revenue also forms part of the revenue that is funding expenditure. So yes, grant is part of that, and it funds expenditure. Some of the donations are specific to, for instance, we want to support this particular program. It's still counted as revenue, but we don't have that flexibility to allocate it where we want to allocate it because it comes with that condition.
Okay.
Yeah.
But the borrowing side, we do borrow internationally.
Yeah.
But borrowing is to fund the shortfall.
Yes.
But that is big at the moment. So what I raised about the Eurobond that is now maturing in November this year, that's a dollar-denominated offshore borrowing. So what happens is if it comes into the revenue pool and then it is utilized to fund spending, hopefully more capital spending rather than other spending, but at the moment that's not really happening. So that is a challenge for us that I think will need to be cleared up about what is the intention with the Eurobond.
Yep.
Now, it seems like there is some capacity still for us to redeem the bond in November, but my personal opinion is we should try and roll the bond because we need to keep some powder dry in the local capital market because the borrowing requirement next year is also going to be quite big. So, yes, there is a mix between funding from local sources and funding from offshore. In Namibia's case, the offshore component is about 30% of the total borrowings. In South Africa, by the way, it is about 10% of total debt is offshore debt. And that is a practice of most countries, is to access the international capital markets by borrowing from there. Now, in our case, that borrowing can become quite expensive if the currency is against you, because we've got a big depreciation in the currency now for the last decade or so, which means our offshore debt increases in value, and that puts a further burden on us.
You want to tell us more about the Eurobond payback?
Yes,
rollover?
Yeah, let me come back to the issues that Flores has raised. I think one of it is the Eurobond. Maybe let's start with that one. Yeah, the Eurobond, as you know, Flores, before COVID came, we thought we were very much prepared for the redemption of the Eurobond because we started putting aside money for a number of years so that when the Eurobond matures, when it's time to pay back, we had enough money to pay. And we almost had enough to pay back the money, to pay back the Eurobond. But when COVID came, we had to deploy that resource to support economic activities in Namibia, as the stimulus package that we rolled out were actually partly funded by the savings that we set aside. So there's still a little bit in that account. So part of it will be used to pay the Eurobond, but part of it we're actually going to use it to pay the leases for Air Namibia, because those ones still have to be paid, even if Air Namibia is liquidated. So the plan with the with the Eurobond is that we want to swap that into a domestic asset. So there is a Namibian pension fund, GIPF in this case, because we are very transparent. We have been talking to them because they are looking for a domestic asset. So they are looking for domestic bonds. They have foreign money that they want to convert into a domestic asset. So they will give us that foreign currency. We will pay back the Eurobond, and we will end up having a domestic debt. Obviously, having a domestic debt is also good in the sense that when the exchange rate, Flores has already talked about the exchange rate can go against you if you have actually money in the foreign currency. There are some professors who call it an original sin. So if you borrow too much into foreign currency, you are committing an original sin, just like the biblical original sin. So we're trying to treat very carefully not to commit too much original sin. So that's what is going to happen. We will then have a domestic loan that we'll have to pay to GIPF over a period of time. That way that we will also cushion ourselves against foreign currency fluctuations. Do we borrow in the future? We may still tap into those international markets later, but we'll have to look at the opportunities. We'll have to look at our total balance sheet, whether it will be appropriate for us to do that. So that's more or less the plan at the moment, to basically swap it into a domestic debt.
Because there's another one maturing in 25.
Yeah.
So we also need to keep that in mind.
Yeah. So we were also thinking about 2025.
So the questions are rolling in, Minister.
Oh.
But maybe, let me just go to another question, and it's from Ashante Gavagas. I would like to ask the panel regarding the financial commitments the government is now entering into. How is the money going to be spent to benefit citizens? How long until we see impact, and how does the government plan to pay back these monies to the African Development Bank? Now so that's the question from Ashante.
Well, Ashante is probably talking about what was announced yesterday, that we have received additional funding from the African Development Bank, because like Flores says, we're not only looking at the domestic market to fund the deficit. The deficit is quite significant because revenue has gone down quite significantly because of SACU, and of course also because of the impact of COVID. So if we only focus on the domestic market, we are going to strangle this domestic market, so to speak. So we're trying to diversify our funding sources. One of it, last year, we approached the African Development Bank to help us fund some of part of our deficit. So that loan was approved few days ago, and we announced yesterday that we are going to get about 1.5 billion from the African Development Bank as part of the financing of the budget. Flores has also talked about the IMF. I think it's now known that we have also made an application to the IMF to get extra funding. We may maybe also benefit from the allocation of extra SDRs that the IMF is now thinking about putting together. It's still not very clear how that is going to be distributed, so we are watching that with keen eyes. So maybe that will also help to support funding our deficit. But we're really trying to diversify our funding sources so that we don't really put too much pressure on the domestic market, because the domestic market is not only government that is stepping into that domestic market, it's also private sector needs to step in that domestic market. And currently we actually want to encourage private sector to increase investment, and that investment has to be funded by resources that are available in the domestic market. So she's asking how we're going to pay back. Of course, this money is to help to support the provision of public services, the buying of the vaccine, and that will help to stabilize the economy. Once the economy is stabilized, of course, the economy will be able to generate more revenue, and that revenue, part of that revenue will be used to pay back the loan. So that's how the equation will work, and we just all need to work together to get the economy going, but because that's really the crux of the matter. We need to grow the economy so that we can increase the base.
Okay. I think the next question is from Tate Tu de Kalako, and I think you've sort of answered the question. So the big thing he was asking here is around about 300 billion funds locally not utilized to capacity. What is the obstacle to the government in sourcing funds locally? And I think you've addressed it with the GIPF funding, so I'm going to skip that one. And I'm going to go on to a question from Philippus Tromp that goes around the dividend tax, being a significant investor in the local economy. I think you've addressed it, but let's just make sure. He's saying, is the dividend tax going to apply to intercompany dividends as well, or will it only be on the final dividend that's paid to shareholders?
Yeah.
If I remember now correctly, in your speech, you were saying you're going to make sure that the dividends tax is only imposed once. But in a group situation, I think there's still a concern amongst investors that if it goes from my subsidiary to my holding company, before it gets divvied out to the shareholders, is it the expectation that there is a tax at the intermediary level?
Yeah, so we will still have to sort out the details, but the idea is really to only tax it once, when it reaches the individual, not the intercompany, because we actually want to encourage companies to retain savings and deploy these savings
back into the
economy. So that's the incentive that we want to create.
Good. I think that answers that question very clearly. I want to go back to ITAS. We've been discussing this for a while now. And I think one of the big concerns that most of the viewers will have, you've now extended the deadline from 30 June to 30 September and 30 September to 31 March. Many people are still not in a position to put in their tax returns because I think way back in March 2019 when the ITAS system kicked off, employers were not really au fait with what they had to do. So in my personal view, I think ITAS works well, but it's like any technology. If your computer packs up, then you don't actually know where to start doing, you've got to get someone to repair it. So my question really is, what are people going to do that are nervous about 31 March? That they're saying I cannot put in my tax return because the information of my employer is not reflecting in the tax in my profile on ITAS.
Well, I believe we will have to go back to the drawing board. I think in the next couple of days or so, we'll have to assess the situation, how many returns are still outstanding that have been issued but have not been returned, and see what should be the long-term solution, because the long-term solution doesn't seem to be extending forever. So we'll probably have to go and find a better way of dealing with this issue, and I think that's something that we'll have to look at in the coming days.
I agree with you. I don't think giving further extension is going to solve it's not going to get to the root of the problem, and that's what I think needs to be. Floris, can I just turn back to you? Fiscal discipline of the government, how do you think that's going? Are they doing well? Is there something that you think they can do better?
Oh, sure. It's a difficulty. I mean, if you compare let's say, the public finance situation with a corporate or a company, right? Over time, a company needs to match its revenue and cost base, okay? So that the cost base does not rise past your revenue, because then you're in a loss situation and you're on a down yield, basically. So the government is in a similar position where they have so much pressure on the cost base, let's call it the expenditure side, because of the vast needs of the economy, just the need to provide services, the need to give subsidies, the need to make transfers to marginalized groups, the need to not cut the civil service too sharply because of the economic situation. So there's always pressure on the cost side coming through, and then what happens is now over time the cost side is now above the revenue side. So there has been a policy of fiscal consolidation now for a number of years. So if you look at spending, it has been reasonably flat. It's been brought under control, it's been flat, but now you had this exceptional year where we have the crisis, where expenditure even increase much more. So that is why my proposal is about targeting a ratio over a number of years where everybody buys into this plan, and this plan survives different political regimes. So it must be a plan that is for the economy as a whole, and say in so many years we want to be at this level of GDP as a ratio, which we think is healthy. So the fiscal discipline has been under pressure because of, I say, the cost base always is pushed, but I think in the end we need to get back to the basics, like the minister referred to the original sin. We do not need to, we need to get out of that mindset where we can just borrow more. Just for now, let's just borrow a little bit more just for now to get through this, and then we borrow a little bit more just for now just to get through it, and then you compile that over time, you're in a problematic situation. So now that difference is also under pressure because your revenue line has dived, yeah? So what a normal corporate or a company would have done is you've got to fire a lot of people, you've got to get your cost under control because your revenue is down. So that is a pincher situation that the minister, I'm sure, finds himself in. So yeah, that's all I can say. Okay. If you look at it, sorry, just for this specific year, the degree of cuts that's been built into various spending items is huge. So spending on goods and services down 14% odd, you know. Spending on capital spending down 30% or so. The wage bill being held flat, basically marginal down in the wage bill. But what pushes your expenditure up now from the bottom past your revenue is the interest bill. Because you can't avoid the interest bill, you can't do anything. So the cutting of the other expenditure is going to have a contractionary impact on the economy. So yeah, that you must also keep in mind, you know.
Yeah, the minister has a difficult act to perform. Minister, maybe the last question comes from Roberto Roy. So one question, he's got a couple of questions. Let me just run through them quickly. The first one is, what is the government doing to close the gap between the rich and the poor? So that's the one. Why don't government just opt to give SME grants instead of loans, which sort of put them in a disadvantage at times? So why don't the government just opt to give SME grants instead of loans? And the last one he's asking is, what is the current status of the IMF loan that the government has applied for? So it's the IMF loan,
Okay.
giving SMEs grants instead of loans,
Right.
and what are we doing to close the gap between the rich and the poor?
Yeah, those are all very good questions. So I believe Mr. Roberto
Roy.
Mr. Roy is probably talking about inequality. So what are we really doing to address inequality, which is a big problem in this country? So we need to understand where the problem is. What is causing inequality? Why is inequality not coming down? So the biggest thing is really the difference in income that we earn. There are those that earn a good income because they have got formal employment. There are those that earn some income because they are in the informal sector, and which is not really generating enough income. So if you actually look at the same person, same qualification, and let's say you have matric or grade 12, you will end up working for NAMDEP in the mining sector, or roasting in the mining sector, and somebody who will end up in a small retail shop. No, same qualification, from the same village. They may even have come from the same family. So the income difference is quite huge. It's it's probably 300 times difference. So that's really what is explaining inequality. So you have a very small section of the population which is earning very good income. You have a big number of the population which is earning a very little very little income compared to the others. So this gap will not close down until we start to create more formal employment that is able to generate more income. So for the people who are on the lower side of the income end to also start moving up. So I think that's really where the trick is. Of course, there are historical explanations; those we need to look at that. But I think the medicine really now is how do we create more formal employment? How do we create more productivity so that some of those that are in there are caught up in the informal sector can actually end up in the formal sector, which actually creates more better opportunities for them in terms of income. So I think that's really what we need to focus on, and that's RAMBI Prosperity Plan is going to address part of that, and also going forward, our National Development Plan is also going to focus on that. And the idea is really, how do we get the private sector to become more active for Namibia, to create more industrial opportunities or economic activities so that we improve our industrial base, create more formal employment. I think that should be the conversation, and that's the thing that we will have to continue to work on. So I think we are getting there. RAMBI Prosperity Plan is number one. We will continue to build on there. The idea now is to try and, first of all, look at the existing businesses that are producing something in Namibia, that have been thriving for a while. Are there opportunities for them to expand? And if there are opportunities for them to expand, what is constraining them? Yeah, and can government come in to provide that missing link and that missing ingredient that is preventing them from expansion so that we can create more formal employment? That's one. The second question that we should ask ourselves is, what new industries can we create? Where are the new opportunities for Namibia, where we can actually use the know-how that is already in the economy, blended with importing know-how from outside by bringing in foreign direct investments to try and create a new economic industrial base. Again, that will help us to create more formal jobs. So I think if we can get that right, I think that will help us to improve the income of those that are at the lower end of the income spectrum, and you'll see the gap between inequality and or the gap between the rich and the poor going down, and therefore inequality will come down. So that's more or less my answer to that. It's a very complex question, but I think if we can get that right, I think we'll go a long way in addressing inequality. The issue.
Minister, I'm going to relieve you from the other two questions.
Yeah.
Our time is formally up, so
okay.
I think maybe we must just debate it afterwards, and
Okay.
then we can get back to Mr. Roy.
Okay.
So, gentlemen, thank you very much. It's time to wrap up. I'm being reminded here in my ear.
Yeah.
So it was great to have you here and share your views and insights. I'm hoping that our viewers have learned something from today, and I wish you a safe day and productive day, because I think that's important for the economy.
Yeah.
Thank you very much.
Thank you,
Cameron.
Thank you,
Minister.
Thank you, Flores. Thank you, Cameron. Thank you very much.
Goodbye.
Thanks to our viewers.